Understanding the cash flow forecast can really help you build your business. In this seminar, we're going to discuss how to create your own cash flow forecast. So let us start off by understanding exactly what the cash flow forecast is. It's a useful schedule prepared in advance, showing the money coming in and flowing out of your business every month. Typically, I would do a cash flow forecast for a 12-month period. If you're going to be doing a business plan, whoever's asking you to develop the business plan may ask for a 2-year or a 3-year cash flow. So why do I really like the cash flow forecast? Well, it helps you manage the cash in your business. And if you know any other business owners, if you've been a business owner for a while, you know the importance of managing your cash and never running out of cash. The other thing I like about the cash flow forecast, it can be used to assess the timing and the amount of future cash flows. So really it helps you plan the future. Whether it's buying assets, whether it's buying inventory, it's going to help you plan for the future. The other thing it helps you determine is if you can afford to pay a loan. So let's use an example. Let's say I'm a business owner and I need to buy a new machine to produce widgets. Once I work out how much the machine costs, what the repayments are, using the cash flow forecast, I can determine if I can afford to repay this loan. And the other thing it helps you do is helps you budget for major purchases. So you can determine when will the business have money so that you can invest, whether it's buying inventory, an asset, whatever it is you're buying for your business, the cash flow forecast helps you do this. When doing a cash flow forecast, you need some numbers to make sure that this is a relevant document. You start off by doing your sales projections. And I'm going to show you when we do our little example how you use the sales projections to create your cash flow forecast. You need to sit down, do your sales forecast before you start doing that. Then you want to work on your cost of sales, especially if you're a retailer or a manufacturer. This is an important cost in your business that you need to know. For example, you might calculate that your cost of sales is 50% or 30% or 20%, whatever it is, of your sales, and it's an important outflow of cash, so you need to know what it is. The other thing you need to determine is, of your total sales, let's say you do $10,000 a month, what portion is going to be cash sales? That'll be credit cards, checks, and cash, and what portion are going to be 30 days or 60 days or whatever terms you offer your client. You need to know that because that'll make sure that you put in the right numbers or the right projections when doing your cash flow forecast. You need to know your cash sales. You need to know your accounts receivable or what portion of your sales are going to be on 30 days or 60 days. You also need to know what inventory you're going to be requiring, especially in the startup phase. This is going to be quite a big investment to fill up your store, or if you're in manufacturing, to buy all the ingredients that you need to buy. You need to know what loans you're going to take for the business, or if you're going to be making an investment in the business as an owner, you need to know what that amount is, and you need to know what your monthly operating expenses are going to be. So it's really having quite a lot of numbers, but I'm going to show you it's not too difficult once you've got the numbers to do a cash flow forecast. The other thing you need to know are what are the assets purchases. So what assets are you going to purchase for the business? And in the startup phase, there's quite a lot of investment in assets when we're getting our business up and running. You need to know if you're going to take a salary. Typically, new businesses don't take a lot of salary in the beginning, but you may be taking a salary for yourself. And you need to know what the loan repayments are. So if you're going to take a loan from the bank or get a loan from another institution, you need to know what the repayments are going to be every month so you can put this into your cash flow so you can do an accurate forecast. Now, doing cash flow forecast can be quite challenging, especially if you're in the startup phase. But to try and make it as accurate as possible, there are a couple of things you need to think about. Number one is seasonal fluctuations. So, often businesses go through stages in the year where sometimes they're busier than others. So if you're in one of those businesses, you need to make sure that you take this into consideration when you're doing your cash flow forecast. Think of price increases, take into consideration late payments of accounts receivable. This often happens. I don't like this, and I don't want you to let this happen, but you'll give your customers 30 days, say, for example, to pay your account, and they don't always pay on time. So when doing your forecast, you need to try and take this into consideration. We need to try and plan for emergency situations, which can be quite difficult in small business. But you know what? Let's try and do the best we can. This is a tip for you. Always underestimate your sales and overestimate your expenses. That's what I'd encourage you to do. Because sometimes we get a bit too confident and we overestimate our sales. When you're doing a cash flow forecast, try and plan maybe for a couple of different scenarios. Maybe a worst case scenario and then a best case scenario is a good idea when doing a cash flow forecast. So what I'm going to try and show you now is how to do a cash flow forecast, a really simple one. Remember, because each one of us have different businesses, yours may be a little bit different. So let's start off with a very, very simple retail type business. So I'm opening a retail business in January. So let's try and let's make it March. Let's make it March. Okay, I'm opening this new business of mine. Let's say I'm opening a bakery business, very, very profitable business. So let's say I'm going to be opening a new bakery. And in the first month, I don't expect my sales to be too high. So let's say I'm going to do $10,000. Let's say in April, because of Easter, maybe I'll do $12,000. April warming up a little bit, maybe I'll do $14,000. June, $16,000. Now you need to understand your business to do these sales forecasts. Sales don't always go up like I'm showing you over here. Maybe then they come down a little bit over the summer months and then maybe up later on. Whatever it is, this is the way you would put in your numbers. So what I'm going to try and do is do a cash flow forecast for 6 months just to show you how it works. Let's then do your cost of sales. So what you'd include here if you were doing a bakery would be basically the ingredients that would go into baking. And remember, this is just a forecast. So this section at the top here is just to help you produce a more accurate cash flow forecast. So let's say, for example, that your cost of sales is 25%, okay? So basically a quarter of your cost of sale, of your revenue is cost of sales. I'm just calculating these numbers quickly for you. So if it was your business, obviously you do it for your business based on what your projected sales are and your cost of sales. Okay, so there you go. I've done my sales forecast and I've done my cost of sales forecast. Still haven't started working on the cash flow forecast. So let me start working on my cash flow forecast now. Because I'm a bakery business, let's assume I'm going to sell direct to consumer, so all my sales will be for cash. $10,000 in March, $12,000 in April, $14,000 in May, $16,000 good month in June, $12,000 in July, and $10,000. Again, you would get these numbers by forecasting specifically for your business, by speaking to a couple of mentors, by speaking to some of your advisors. They would help you do this. So in this case, we have no receivables. I've done it to make it simple. No receivables over the first 6 months. Everything's paid for cash. Let's say I've opened a new bakery and I've given the business a loan of $70,000. and I've got a bank loan, let's say, of $45,000. Okay, there you go. So my cash inflow for month one is $125,000. Then I've got my operating expenses. Let's say I'm going to spend $500 a month on advertising. My accountant's going to cost me $250. My rent is going to be, let's say, $1,500 a month. My telephone, let's say $100. And again, the important thing as I go through this exercise is I'm putting in these numbers, but for your business, you would put in your numbers, okay? So you would put in your numbers, and this would give you a forecast. Remember, forecasts are not easy to do, but once you've got the numbers, you become better at it, so understand that. Let's say we've got employee salaries of $1,500. Let's not take a salary for the owner in month one. Say our insurance is $150. We've got stationery, $50. We've got repairs and maintenance. This is always difficult to calculate because you don't know what it's going to be. Let's put in $200. Let's say our startup costs for this business were $110 for all the equipment and stuff and the fittings for the business. And then our inventory, let's say we purchased an opening inventory of $5,000, okay? And then we've got to replace the inventory that we've used up each month, okay? So in this case, it's our cost of sales. We did $10,000, we expect to do $10,000 of sales, and we expect our cost of sales to be $2,500. Then we'll enter $5,000 for month one because we're going to have startup inventory. Month two, we need to replace the inventory we've purchased, and sometimes this number will go up a little bit depending on how the business operates. Month three, $3,500. Month four, $4,000. You see where I'm getting this number from? The top over here. So I'm getting it from the top because those numbers are what I expect to use of ingredients as I go through. $3,000 and $2,500. So let's look at this forecast I've done for the first 6 months. In month one, I expect to have an inflow of $125,000 and an outflow of $119,000. Okay? So I'm going to have a surplus of $5,750. Now, just understand that month one, month two, month three, actually, for a few months, you could have a negative inflow, which is okay, as long as you know the reason why you're going to have a negative inflow. So that's the key thing. You notice I'm copying the numbers across here because these are going to be basically fixed expenses every month. There you go. So month one, $125,000 coming in, which is all this inflow, and $119,000 going out. We've got a positive cash flow of $5,750. It's a brand new business, so our opening bank balance is $0. Month two, we've got $12,000 of inflow coming into the business from sales. We've got an outflow of $7,250, giving us a positive cash flow of $4,750. We add on what was already in the bank balance from the previous month, giving us a closing bank balance of $10,500. You see how it shows you basically at the end of each month how much you're going to have in the bank, which is really useful in the startup stage of your business, because then you can go to your banker or your investors and show them what's going to happen. So I encourage you to use this template, or there's a whole lot of other templates available out there, and create your own cash flow, at least for the first year, but if possible, for year 2 and year 3. And all you're doing is you're forecasting. You're saying, this is what I think is going to happen. What you can do once you've created your forecast is actually do a cash flow forecast showing your actual numbers. So maybe what you'll do is at the end of each month, you'll go in and put your actual numbers that you incurred, okay? So this will really help you, make sure that your cash flow forecast is an accurate reflection of what's happening in your business. So this is what I recommend you do. At the end of every month, actually take out your bank statement, check all the numbers, and put the actual numbers that went in and out of your business every month. So this will be an actual cash flow forecast, and this will be a projected one. Okay, so you've got two cash flows forecasts here, and all I did is I copied the template from one sheet to the other so that I can do my actual. So this is what I encourage you to do. Start working on a cash flow forecast for your business. In the startup stage, it plays a very important part. But even as your business grows, you can use this as a management tool. So let's use an example. Let's say I need to buy some equipment in month 6. So I need to buy some equipment in month 6, and let's say this new piece of machinery is going to cost me $40,000. This cash flow forecast will tell me what the negative number is going to be in my bank balance on August when I buy this new machine. I can then go to my bank and get a line of credit. Okay? So this is where the cash flow forecast really helps you. Doesn't matter what your business is, whether you're in a retail business, whether you're in a service business, or in a manufacturing business, you can use this template to create your own cash flow forecast. I encourage you to do that. After this session, start working on your cash flow forecast. Speak to your accountant because he or she can help you work on this cash flow forecast and come up with I don't want to say accurate because that's not true, but come up with some estimates that take in what you know about your business to do a forecast, which is going to really help you manage your business. I find the cash flow forecast one of the most useful documents in managing my business. So let's move on and discuss some of the things that you need to do to improve your cash flow. I am sure you've heard business owners saying that they've got cash flow issues. So what can you and I do? We can adjust our prices up or adjust them down if we're not generating enough sales. We can control our cost of sales, our inputs that go into producing our products. We can decide, you know what, let's not give people terms and sell for more cash, getting cash flowing through the business. We can reduce our receivables terms. So that's something we can maybe do. Say to clients, we can't give you 30 days, but maybe we can give you 14 days to pay us. So these are some of the things you can do. Increase your payable terms. Maybe negotiate with your suppliers to, instead of paying cash for your inventory, they give you 30 days. These are some of the things you can do. Manage your operating expenses. I think this is one of the things that you can have a direct impact on. If you're having a cash flow problem, go through every single expense and see if you can reduce it. Monitor your advertising. As a business owner, you need to know which of your advertising is really working. And if it's not working, you've got to make a decision about that. And set budgets for yourself and for your employees. It's going to really help you manage your business more effectively. Here's some final tips about the cash flow forecast. I encourage you, after this video, that you go and develop a cash flow forecast for your business if you haven't done so. If you need a bit of a guidance and advice, speak to your accountant. He or she can help you. Update your cash flow forecast regularly. Just like I did in that exercise, I had a cash flow forecast, and then I had my actual numbers. So you make adjustments as you go along. If you're a business owner, make cash flow your problem. It really is your problem, and you've got to manage it. You never, ever want to run out of money. So make sure you manage your money so you never run out of money. Improve your cash flow by taking the appropriate steps that you need to. Don't leave it. It's not going to go away. And make sure that you ask your accountant and other advisors for help. I believe that the cash flow forecast can become one of your most important management documents. It's going to help you manage the inflow and outflow of cash in your business and ensure that you never run out of cash, and this is going to help you build a successful business. Remember, if you have any questions about the cash flow forecast, speak to a small business consultant at Enterprise Toronto. they can guide you and advise you where to go and get the information to ensure that you do a cash flow forecast for your business, and that's going to help you potentially build a very successful business.